Good morning, all. Hope you're doing well today as we head into Thursday, January 9th. Hey, I got some economic news I'm hoping to talk about. I hope Dave gives me a chance. A CFO survey that I think's found very interesting. So that will be one of the things that we'll share today as we get started, talking about some of the chief executive officers, chief financial officers. What do they think is going to happen in the coming year? So, hey, the other thing I want to mention real quick before Dave jumps on is I wanted to offer you guys just a phone call. Some of you, are hesitant to come in and see me, and I get that. So why don't you just take a minute and schedule a 15 or 20-minute phone call? Give us a call here at the office at 382-0037. That's 863-382-0037, and schedule a 15 or 20-minute just an introductory phone call where we can talk to see kind of where you are and to see if we can be of any benefit to you and give you any pointers. So take us up on that. Dave will be with us here in just a few moments.
Light FM, that's Shania Twain. I'm Morning Dave. It's 8:41 now, 19 before 9. Let's check in on Wall Street and find out how your money's doing and whether or not the overseas action is screwing things up this morning. So far, doesn't look like overseas is messing things up much, but we got a whole bunch of stuff going on from the standpoint of our economy. Let's head downtown to the offices of Statler Financial Services. Phillip Statler standing by. Good morning, sir.
Hey, good morning, Dave. I hope you're doing well today as we are winding down this first full week of January. A couple more days to go. But yesterday was not a bad day on Wall Street.
Yeah, I can't complain. Up 161 on the Dow, up 60 on the NASDAQ, up 16 on the S&P. You can't even tell that we've got a unsettled situation in the international front. Like I said, it seems to be on hold for the moment. We don't have much of a attention span on Wall Street, do we?
No, we don't. I got to think you really like where oil closed down yesterday, below 60.
I didn't even see that.
Yeah,
Holy.
Closed below 60 yesterday.
You're right, down to 59.71 as of this morning. Boy, the world's coming up roses, and it starts out with the first-time unemployment claims that the federal government releases on Thursday. On the top line, things look absolutely marvelous, down to a post-recession low again. Only 214,000 new claims, down 9 from last week. But the report kind of gives some maybe flies in the soup. We still have a structural problem, I gather.
Well, it does look that way, Dave. I mean, you got to like the numbers we're seeing, right? The first-time claims were less than expected. So that was a good thing. But one of the things that I dug down into the report was that continuing unemployment, those people that are still on the unemployment rolls, has surged to a 1.5-year high at the end of 2019. So the people on unemployment right now is the highest it's been in a year and a half. And I got to think that that's not a good sign. I mean, we look at the weekly jobs number, and we like those numbers. But when we look at the continued unemployment, which is also vitally important, that number is continuing to go up.
And that's going to be an ongoing problem, I suspect. We started getting indications of that during the Obama administration, as unpopular as it was when they were talking about higher unemployment numbers being, quote unquote, the new normal. Well, Trump managed to turn that into a fib, but that having been said, we still have a structural issue of the less trained, the less employable, and we still have a challenge to be able to find them jobs in this economy, even as good as it's going.
Yeah, that's true. And I think that's probably the issue there is that, we've got those folks, and then we've got the folks that have just been downsized because of technology, and they just couldn't keep up. The older folks that just couldn't keep up with technology or didn't keep up with technology that are finding it difficult to find a job.
Economists refer to that as structural unemployment, and it's going to be a challenge as technology advances. And that, I think, might be one of the earlier government reports that we've had that actually admits that we do have a structural issue, because that really hasn't come to the fore very often, has it?
No, it hasn't, and it's definitely nobody's really looking at that when it comes to the futures today, because it's not really affecting anything.
Absolutely. Well, I suspect that investors have a tendency to look at the top line and don't go farther, which is kind of interesting given the fact that they pretty much rip companies' reports to shreds every single quarter when they come out. We go looking at Top line looking good. Profit looks good. Same-store sales look good. Somewhere 4 pages in, investors find something they don't like and tank the stock. They don't do that to the government, do they?
No, at least not right now. They're not.
Evidently not. We are starting to get some news out of the retail shopping season, November, December of last year, and it ain't necessarily good news. The one that I saw was a report from J.C. Penney. You and I have been probably sounding pretty ill-sounding winds for them for some time, but they said that their same-store comparable sales, December to December, from 18 to 19, actually down by something like 7%, which is really, really not good news for that chain.
Yeah, when we look at their same-store sales for the holiday season, it was down 7.5%. Now they did, which is off for me, but they did reaffirm their full-year outlook. So I'm not sure exactly what that means, but they think that they're whatever their original numbers were, they think that they're going to hit those numbers. So, but so we talk about pennies. The other thing that's come out is we got Kohl's is readjusting their same store sales numbers are off. We've got the other one that I saw that Victoria's Secret's parent stock, their same store holiday sales have trimmed down their forecast. We are seeing a lot of retailers that are backtracking on their numbers.
And given the fact that we saw gross overall figures in the 3.5% to 4% growth range, I can't wait to hear what the internet sales concerns are talking about, because my suspicion is there was a bigger growth on online sales than anybody expected, given what we're hearing out of the brick and mortars now.
Well, I'm definitely thinking so. And then on top of all that, we had the first kind of retailer report, Bed Bath & Beyond. Mm-hmm. They had a quarterly loss of 38 cents a share versus what they were expected to make, 2 cents a share. So that's a 40-cent swing from what they thought they were supposed to be, the analysts anyway, to what they ended up.
Holy crud. Yeah. And going from light green to deep red is exactly the opposite of what they wanted.
Right. Yep. And so, revenue was below forecast. The company has withdrawn its full year forecast, hasn't come out with a new one yet. Of course, they got a new CEO. He's saying, hey, this is, unsatisfactory. We're going to put some pressure on. We're going to get this fixed. But they're trading down today, 12.3% this morning.
I'm seeing them toward the top of my big losers list, and I've just got a whole pile of retail on the big losers list. Some of it is out of the reports that we actually have in. Some of it is just sector sell-offs based upon what investors are seeing. But this isn't going to be a fun day for retail at the very least. Earnings season, still just basically the early cracks in earnings season. Have we got any other reports that are out today, or what are we looking at, and when are we going to start seeing the flood?
I'm not sure when we'll see the flood. I think it'll be middle to end of next week. I think we'll start seeing some more trickling in.
That would be, yeah.
Yeah, but here's what I did see that I think folks need to be aware of is I saw that Deloitte, which is a major accounting firm, one of the big four, they do a CFO survey on the economy. And CFOs are the chief financial officers of the big companies. And so they surveyed them, and it wasn't good, Dave. Those 77% of those folks believe that the stock market is overvalued. They believe that we are going to see a slowdown sometime in 2020. And they expect dismal results in Europe and China. And so they're seeing that the consumer and business spending is going to be on the decline this year. And so how are they going to battle that? They said, we're going to cut what we can cut. So anything that's discretionary spending for our businesses, we're going to cut that back. And then the other area that business can really cut cost control is in the labor force. And so they're talking about headcounts will come down. So they will be laying people off as they see things slow down on their front.
Boy, just aren't you a dose of merry sunshine this morning, huh?
Yeah, I know. Everybody's going to think I'm a pessimist. But, hey, folks, we need to be realists. We need to be realists when we look at where the market is today. And let's face it, this market is in the about the 11th year of this bull market. And so we know historically it's the longest one we've ever seen.
Absolutely, you got to look at it, and something you and I have been singing this hymn for a long time. You can't turn down, you can't repeal the business cycle. There's going to be a recession at some point. We hope that the Federal Reserve has the smarts to manage the economy to the point where it's a soft landing. But a slowdown not only is necessary and is unavoidable, but in reality, it actually can be good for the stock market and for investments and the economy as a whole, as we basically shake out the failures and let the ones with the bead on the future succeed. So while it's unpleasant, it's a necessity of life as economic life evolves. But that having been said, that Deloitte report, even if you allow for the fact that CFOs are not exactly known for being the starry-eyed optimists in any company, that's one more point of view that needs to be factored into one's investment plans, right?
Exactly. You're so right. And especially those people that are getting somewhat close, 5, 10 years out from retirement or already retired. Those folks need to be paying particular attention to what's going on.
Absolutely. One of those times where at a certain age, safety starts becoming the priority. Resetting the table for the morning. Like we said, it was a green day on Wall Street yesterday. Everything was up by 0.5% or better. The Standard & Poor's was the weak sister in the bunch, and it was at 0.498% up. So by and large, it was a good day yesterday. 45 minutes before we open this morning, Phillip, what are we looking at today?
Hey, it's still green ink today, Dave. We're seeing some good increases. We got the Dow up almost 0.4, $112. The S&P 500's up about 35 basis points, $11.13. And we got the Nasdaq up 0.6, $52. So things are looking good on the index side. Gold and silver not quite so fortunate. We've got silver down 1%, back below $18 an ounce. And we've got gold down 0.5% to $15.52 an ounce. And then gold, like we were saying, it's basically even from where it closed yesterday at $59.60 a barrel.
But that really is nice to see a little bit more controllable price in oil. Again, I'd imagine indicating a little bit of an easier breathing pace from the Middle East, wouldn't you guess?
I'm thinking so.
I guess too. Overseas markets, by and large, on green ink across the board. Japan had an absolute party. The Nikkei was up by 2.3% at the close early this morning, and the European markets morning too, midway through their day. Phillip, advice needed. We're talking about glitches on the horizon possible, and at the very least, a volatile situation as far as what could happen in the near term. How do I get a hold of you to make sure my risk is minimized?
Dave, they can give us a call at 863-382-0037 to schedule their financial x-ray review of their current portfolio to make sure they don't have too much risk in that portfolio, especially heading into retirement. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And just about every weekday here on Light FM as well. Phillip, thank you so very much. We'll catch you in a while, all right?
All right, buddy. Have a great day.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember that.
Hey, folks, again, I want to thank you for joining us as we head into this new year. I want you to be prepared for what's going to happen throughout the year. Give us a call at 863-382-0037. That's 863-382-0037 to schedule your financial x-ray review. Do it right now while it's on your mind. Have a great day. I look forward to speaking to you soon.